Mic check, mic check. What's going on, everyone? This is Jordan with Conquer Trading and Investing on this Thursday morning. We have a double header this morning. We got the ECB. We have Jay Powell out on the mic right now. Lachie going ahead and letting us know we don't want to stop too soon, right? We don't want to stop until the job is done. The Fed going ahead. This is amazing. Actually, Powell is just cleaning up where he dropped the mic. The last FOMC meeting, as Powell was speaking during this press conference, he let something slip, something very important slip. He said that, you know what, they feel that they're towards the neutral rate, that they're getting ready to be done hiking. And the market, their instant reaction in the market was like, all right, boys, let's get out and let's front run. And that's exactly what happened. And we had this huge move up in the equity markets, and the central banksters did not like that at all. You saw as soon as Powell did that, they got out in the mic and they started having all their Fed speakers say, no. We're going to, why? Because all of the tightening that had taken place through the majority of the year was unwound almost instantly. Not all of it. A good portion of the tightening had been unwound too quickly. That's not at all what they wanted to achieve. So then you had the central bankers go ahead and make sure that everyone's back on message. And then you saw Powell and Jackson Hole affirm that as well. And then that's more of that today. That's the message that's being shared today. Nothing has changed whatsoever. Not only that, we expect I thought that the Fed was truly data dependent right now. And I thought things like next week's CPI actually mattered. We've seen since a leak by the Fed making sure to communicate to the markets well ahead of time that they plan on a 75 basis point hike this month in September. And the market's reaction to that, so far has been, let's take a look. The market's reaction to that yesterday was actually to break back above that trend line over here, get above the green line of trend line support. And we're just currently in no man's land now. Obviously, when I say obviously, you could look at the red bars. The trend is down. The momentum is down, right? That's clear. But we had taken out this trend line over here. Follow my mouse. Let me highlight it a little. Good morning, everyone. Great morning on this Thursday. Thanks for choosing to be here. Really grateful to work in this environment with all of you. By the way, more in today's session, during today's live stream, a couple hours from now, we'll make sure that you have the correct template needed for that. There was an update yesterday. There might have been an oversight on my part, but we'll correct that for sure. That's easy peasy. But this was a technical breakdown that occurred right over here. And then we had on the news of the leak. Could this have been people squaring up, positioning after a long weekend before ECB, before Jackson Hole? I don't know. Could be. But it seems to me this was the market actually pricing in this, that the Fed feels confident enough to hike by another 75 basis point hike in September. The Fed believes, everyone tells you, do not fight the Fed. Do not fight the Fed. Well, the Fed believes that the market could withstand the tightening. And everyone is like, pile out of risk assets as quickly as possible. Things are going to break. Whoa. Which is it? Are you fighting the Fed, or are you not fighting the Fed? Or do you not know because you don't trust the Fed? Let's be authentic. Let's be sincere. I could get on board with you saying, listen, I see that they're tightening and I don't believe that the market could withstand it. And therefore, I'm getting out of risk assets and I'm just getting into the safety of the dollar. Okay, that's a good plan. I get it. But don't come out and be like, don't fight the Fed as you fight the Fed. The market yesterday was showing signs. It was put out yesterday, the tweet. If you're not following on Twitter, I think in the description below, you could find the link to that. The tweet put out there was the market's reaction today means two things. It's just noise, and noise would be that you have this move up, and then this is quickly faded down, right? That would just been noise. It meant nothing, that move yesterday. Or it could mean that the market is actually buying. This is actually a power move by the Fed. They're showing that they believe that the economy is strong enough to withstand it. But Jordan, we're in a technical recession. We had 2 quarters of negative GDP. Okay, I get it. You know what? I honestly feel like the business cycle has been lost. It's a fake business cycle. This is no longer a business cycle. This is the Fed cycle. Therefore, like fake recession, right? Look at the job market. It's hard to argue. Have you seen people? Have you been outside? Are people actually like it's humming out there? Yeah. So I'm not really. I think it's more complicated than people make it to seem. And I think what happens often is people get comfortable with whatever's easy for them to believe, right? It's because it's difficult. It's really difficult to navigate the markets when you are looking at. By the way, you saw the ECB. They're tightening, and they're like, look, we have to tighten now to slow down the economy. What do they think that these energy prices are doing? I mean, if that's not enough alone to slow down the inflation in these, I guess, Jordan, that's the cause of inflation. Okay, I get it, but don't you think at the same time it's going to also cause enough tightening on people's budgets that like we're going to see demand destruction and that like these inflationary forces are going to have to come down? What's the need here to put the brakes on, slam the brakes shut, and potentially cause something that could be quite difficult and lengthy to recover from? I don't know. I don't have those answers, but one answer might be that actually, this thing could go a lot longer than people think. Thank goodness. Thank goodness that we have the charts to go off of. The charts tell the true story, and by going ahead and following what's in front of us, we could do our best to stay on the right side. Thank you, Benny, for going ahead and showing that love here this morning as we get started. 8:28. Good morning, CTM. I'm grateful to be here with you as well. Luke, everyone, happy to be here. That's true also. There was a beautiful chart put out by a sentiment trader on Twitter yesterday, and it was showing the put to call ratio and the put ratio from institutional money was at like, let's say 3 times as high as it was during the crisis of 2008. And I think I've said it before, I said it back in 2021 when all of a sudden everyone was like, the institutions are here and we're just in awe of the institutions. Yeah. How did Tesla do, by the way, on their Bitcoin trade? People give institutions way too much credit. For me, honestly, where the credit comes is their ability to go ahead and front run clients as well as drawing liquidity from their clients. When you start seeing obnoxious calls one way or the other, usually that's where we're getting ready for a market turn. Right now, what we're seeing though on the NASDAQ, we'll start with the NASDAQ over here, and we are seeing a false breakdown right over there, right? I think it's a good look. What happens if I take it off log? Yeah, it's the same. It's a breakdown. And then all of a sudden, we gave ourselves a little bit of room 2 ways. We also went ahead and, trying to get off that, we also went ahead and just took a quick look. I didn't leave it there. I didn't need to. We broke above it, just that one clone trend line off the top. And we broke above that. And right now we are coming in for a clean retest. Back here's the breakout of the trend line. We're back into that area of support for a retest. It's very counter trend. I can't imagine we don't take breakouts, right? We always wait for, outside of cryptocurrencies in a bull market, breakout, retest, resumption. And here you have the breakout. Now you're coming in for the retest. If this area holds and then we're able to come around over here, it looks like a very good entry on the retest, especially coming into getting these 2 double header high impact news events out of the way, and then coming into next week's CPI, why it's not going to go ahead, I imagine, sway the Federal Reserve's expectations for a 75 basis point hike in September's meeting. If it comes in rather soft, that doesn't mean that the markets aren't going to say, we are actually seeing a bit of a turn finally. Inflation starting to come off, albeit a little, but it's coming off. And that might be or give the juice for some type of rally into resistance. Resistance is up here in this area. We have this whole area of supply above us, trend line resistance, And we are, I'm going to call it no man's land. We are for sure in a sell impulse right over here. But if you were short, I would be taking profits on that breakout today and today's price action. If we break down below, you're coming right into support as well. I wouldn't want to be getting short over here. I would want to be out of the market and waiting and watching. Yes, the S&P 500, same exact thing. And we have a breakout, and now we're just coming in for the retest coming off Powell. Dollar looking rather strong today. My expectations personally was that the dollar would be a little soft with the ECB coming in and hiking rates for them quite aggressively. But notice this line we put in yesterday, and we said that we are not going to, like, a break at this line will mean nothing to us. Remember, this is from yesterday's session. And then we said we're going to wait for a little bit of a confirmation below. And all that's happened so far is that proved to be pretty good TA, right? And you've seen that line, that support, not over there, over here, has now been tested. So we could go ahead and say, you know what? That was pretty good awareness. We could go ahead and remove that. That's just going to mess up the chart. This is really what we want to pay attention to. It's what the market's paying attention to. And if at any point in time we see this continue to rise in good form, milkshake style, then we might be able to put up, a more aggressive approach of a line, a trend line at another time, but not yet and not now. Right now, we got it exactly where we want to be. And then we also know if in the coming sessions this breaks down. Oops, I didn't mean to move that. If this breaks down over here, then that's a nice little scalp. There's some room over there. It's way counter trend, but hey, we're going to be watching. And then if that happens, that sets up us to be looking for any type of impulse out and trade with the overall trend, which is obviously up. Again, this was a big move that occurred though. It's just that over here, I don't know why I was sleeping, but I was. 10-year, all right, continue to appropriately go sideways. Right, just a little bit more of a range than our expectations were, but for sure sideways and appropriately it's so. Like, markets seem good. There's not always a trade. You don't always need to be trade in, but there is always opportunity out there. You noticed yesterday that we kind of, like, just for whatever reason, our eyes went towards the silver stuff. Interesting development. And when I say interesting development is that we did have a breakout of this trend line. But just as per yesterday, that meant nothing. We were watching this line as resistance, and look at that. Do you see how that happened over here? That is actually holding as resistance. And you could see that price is spiked above it, and that resistance is holding, and now we're wicking down. So I would say, again, good job. And that's what happens. When you begin every day putting the work in, all of a sudden you start getting more check marks, check marks, check marks. And then you start really getting into the zone, getting into the flow, and then the trades start coming to you. There's a big difference between jumping in front of your screen, jumping in front of the chart, pulling up a chart, and then just taking a trade. And then you get into the trade and you start watching price and you start watching the chart. A couple of days pass and you're like, oh, here's where I should have entered. Yeah. Not that you didn't know that from the beginning. You just spent the proper time preparing now. Now, granted, you're in a trade and you're watching it go against you because you had no business being in a trade. But point being, if you would have stared at the chart for a couple of days until the setup came from you, you know how to recognize it. You just don't know how to execute yet. You're going to get there. So over here we have price coming into resistance and being rejected. And where are we? Between this area of broken. We're in a downtrend, first of all, clear as day. But at the same time, we had this trend line break, and then we're into resistance, and there's no range here. So this is no man's land, right? But we continue watching. Why? Well, we could go ahead and say of this also, like, I could see that this is a downtrend, and not only in a downtrend, similar to this right here. Do you see this little bearish bear flag? A bearish bear flag. A bearish continuation pattern, this bear flag that broke down. You can see over here, a very similar pattern is arising. This is a bigger range and wider, but also a channel developing, a bearish channel. And if a breakdown occurs, that's a bearish continuation pattern. So we could line it up and watch it from the downside. And at the same time, getting back above here, getting above this resistance, getting the opportunity to confirm that into support, and then resuming off, we have a good old-fashioned trend change happening. And we'll be able to participate in that as well. Luke, I saw this morning on Twitter, you went ahead and you took a look at gold. So in true to form, let's go ahead and take a look at gold. I'm going to go ahead and just connect that line over there. And I'm coming up. This is interesting, right? Where do you put the trend line? As it is off of here, coming off the touch over there, right? And then saying, okay, well, not only there, I had a touch here, Or do I drop it down to here? And when I drop it down to here, I say, oh, well, look at all that. That was all resistance. And then over there, that was support. And I have to say, I don't know. I don't have the answer. Like, it's subjective the way that this type of TA is done. I could also say off the top over there, well, that also was confirmed into support. And then it held the support over here. So they both make sense, but it gets too noisy for me. So, number one, I'm either going to look for something different or I'm going to just abort, right? If it's not clear, move away. So what about the top trend line over here? And I could say, well, when that breaks, Luke, this is the look you gave. When that breaks above, that looks pretty clear, like we're having a potential trend line break and trend reversal. And then you could also go ahead and put in a double black diamond over here, right? And I could say, just like silver right now broke above, gold lagging silver a little bit. If I pull up the gold to silver cross, which one is outperforming? And actually silver. Okay, so that makes sense, right? Because silver over here is having more of a breakout. You see the trend line break to the upside. Gold having more of a problem. And then you see silver outperforming gold. So, I mean, there's nothing. Gold looks fuzzy to me. We'll continue watching it. What about for the downside? We're in a downtrend over here. Momentum is to the downside. Is anything developing? Not yet. But do you remember when we were looking at recently Bitcoin and Ethereum? And do you remember that Bitcoin's consolidation towards its lows were more like this, sideways, as gold is developing there? And then Ethereum's had that more of a move up, right? And then what happened? What happened on the Bitcoin? And then Bitcoin had this consolidation right here I was talking about towards the lows, right? Towards the lows, and it broke down, made a nice leg down. What's happening now since then? Well, nothing. It broke down, and then it broke down, and then it came in for a retest. Broke down, retest. Almost a perfect retest. You see that? So breakdown, retest, and it hasn't resumed down yet, but we'll see what happens. It could go either way. Are we seeing any type of potential early bird warning signs for a reversal out of here? Well, this pattern didn't play out, this descending wedge. But again, that's not something that we were just talking about, the pattern that was setting up and actually why we don't take it anymore because of CTM 2.0. But let me go ahead and redraw this now, because what happened in CTM 1.0, which is an enormous weapon. If you have an entry over here, right, and your stop loss is right over here, you can see the stop loss on this very bar is taken out. You go ahead and then you redraw the line and you take it off the high right there, that high peak right there, and I come down like that, right? So now we're just, well, that, you know what? That's still a descending wedge, Jordan. Yeah, it's subjective. It's just TA. TA is all subjectivity. Now, the difference between CTM 1.0 and 2.0 is CTM 2.0 is all mechanical. There's no subjectivity whatsoever involved. Unless there's a rule change that's made. That's subjective, whether or not you choose to implement any type of rule. But once you do, then you stick to it. That's the main difference. But there's a great, let's say, asset. It's a great tool to be able to trade the markets with subjectivity as well, because it all comes down to risk management. On this trade that you're taking, when you have right to here, let's say that you're risking 1%. All right, so you know, by the way, on that tight area, right? This is a $500 move. That means I'm risking 1% here, but for every $500 it goes up, that's 1%. You know, so Bitcoin to move up $5,000 would be a 10% move. Does Bitcoin have the potential to move up $5,000? Yeah, in a month it could do that, and it just did it the month before, right? So you're telling me that you have basically a 1 to 10 risk over here on this trade. Is that something that is good? Yeah. Does that mean that, like, just because you have an entry signal it's going to work out? No. No, 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 no. Nor do you want it to. I mean, not that you don't want it to, but you don't want to expect it to, right? Now what happens over here? Let's say there's another entry that occurs over here. Well, my stop loss this time, I'm going to risk that same 1%, right? But you see that, well, that's $1,000 this time, right? So a lot of traders, they make the mistake is that they'll keep the same position size. Let's say your position size, to make it easy, was just one contract from over here. Now the distance between your stop loss and entry is twice as long. If you continue to trade one contract, your loss is going to be 2x. It's 2 times the size. You didn't change your position size. That's not how you do it. You need to go ahead and you say, oh, my stop loss now, it's $1,000 away. So my position size needs to be a half a contract this time. So I have, the same risk per trade. The risk is 1%. Oh, but that also means, Jordan, that means if this moves $5,000, I only make 5%. I'm only interested in my gains. I want to know what's the max potential I could make. Oh, wait, I shouldn't do that, should I? No, that's not risk management. That's not risk management at all. If you want to be successful, manage your risk, right? So yeah, that does mean if you have the same move into 25,000 and a $5,000 move, well, this time you're only making 5%. Okay, so what? Don't look at, like, don't take a calculator and talk about, well, if I have X amount of return over X amount of years, I'm going to make X amount of money. No, start putting up gains. Start putting up gains. Jose, what always a bright light to see you over here. Benny, how do you identify whether a move is counter trend within the main trend or a major shift in direction? Right. Well, that's the thing. You never know. Benny, you never know. We need to pull up a chart and just look at it. And I could talk about the DXY. It's a great example that's occurred. Before we do, let me go ahead and take a look at Ethereum just before we move on, right? Ethereum was a little different. Benny, I'll talk about that in 1 second. I'll pull back up that question. Luke, I'm on log for what? I don't even know what you were talking about. Were you talking about gold over here or silver? Let me jump back over here. All right. Back into it. DXY, Benny, we'll start over here on a trend change. All right. So here's a perfect example. Right now on the DXY, first of all, you need to pick a time frame and stick to that time frame. You could have multi-time frame analysis, and that might be how you operate, but you need to understand that you're going to see many counter trade moves occur on those smaller time frames, and on the larger time frames, it's going to be holding a trend more often. I think it's less confusing if you stick to a time frame. Look, I could tell you for me that the 8-hour time frame is the most profitable, the most fruitful, but you have to find something that you're comfortable with. All right. Let's just point out over here that we are in a massive uptrend, right? And then we're going to come down to the 8-hour, and then I could just show out what happened over here on this massive uptrend. And this was something that we looked at a sell impulse occurring. It's counter trend. We talked about it being counter trend as it occurred, but that counter trend trade, it could be the start of a new trend, and that trend could wind up being a major trend reversal. Paul Tudor Jones puts it best. He says that the most money could be made on the trend change. But you also need to take the most stop losses, like repeated losses before you're going to catch that trend. What does that mean? Well, the reason you have the most potential on the trend change is because you could see the position sizing we just talked about. It's much more to my advantage to be taking a trade with a risk to reward going into it than if I'm taking, for example, stick with me, right? If I have over here, if I take this trend line breakdown over here, and then I have like measuring from my stop loss is still up here, and I'm measuring the trade like that, the position size is really small compared to my position size over here for the same amount of risk, right? If I'm using a stop loss. Just because I'm taking this trade entry over here does not mean that I have to have my stop loss all the way up over here. I'm just trying to illustrate a point, right? Because your stop loss, if you were trading that, should have very well been right here in that trend line break. But in entering that trade, could you have put your stop loss over here? We did that last week. We did a beautiful episode just on stop loss placement. So that's not what I'm trying to answer right now. What I'm trying to answer, Benny, is how do you know? Well, you never know. That's the truth. There's no one at any point in time who could ever say with any type of certainty at this particular point in time, this is where a major trend reversal is happening, ever. Now, you could have something that occurs like in Bitcoin in 2018, and you have, a major capitulation event, which is this over here. Bitcoin off in roughly 50 days, 50%. And then you could see that, well, all right, you saw a whoa, sharp rise. And then when you came in and you made a lower high, excuse me, here's the low, here's a higher low. And then you start coming out of that, you could say, well, that's an Adam and Eve bottom coming off a capitulation event. And that might be the bottom. That there's a probability that could be a major trend reversal. But notice that took also a few months to play out. A lot of people are looking for things because maybe you're on a trader's time frame, the 8-hour time frame, and you're looking for things to like happen and see them instantly. No, if you're looking for a major trend reversal break, odds are it's going to take a little time to develop. We'll look at the DXY coming out of the most recent major trend reversal in a second. I do want to point out, though, CTM over here on this beautiful trend line break. This one would have stopped out, right? You had an entry right over here. Let me show you. You have an entry right here. This is what we just talked about right before on using Bitcoin as an example. Stop loss is right here. Let's say I was risking 1%, okay? And stop loss. So then what do? You're moving, you're readjusting your trend line over here. There's a thing in the way. The zoom in, hold on. All right, so I'm readjusting that over here. And then I have over here an entry again. And here I'm risking 1%. How far away is that? Let's see, that's $3,200, $100 for 1% move. All right, and here's the entry, and stop loss is down here, and let's just say this thing goes to $69,000. Every 100%, every $100 move is a 1% gain. You do the math. I mean, do you have to use $69,000? Just trying to give you an example and show you something. But that's the power of that. Now, most people would take this trade and they would exit here, or wherever they exit, somewhere around here, they would exit, and they're like, I did really well. All right, but you cut your winner short. That's all you did was cut your winner short. So anyway, that's why you need a plan, though. You have to know before you get into the trade what your exit looks like, how you're defining an exit. And that could be so many different things, right? Your exit could be, a solid, like a static take profit away. Your exit could be using average true range. It could be like 3 ATR away. If price moves 3 times as much as the average daily range over a 14-day period, you're getting out. It could be a scaling moving stop. It could be a trailing stop. It could be a gazillion different things, but you have to define it before you enter the trade. You have to actually develop a system that you are following to develop an edge in the market so that you know over a given period of time, like the casino, who doesn't care about any given blackjack hand or roll of the dice that happens at a given moment. It knows over time it has the edge and is going to be winning. And there also where you know if you do not have an edge, if you're developing a system, a strategy, you also able to refine it by, and first, don't be trading live. Trade a paper account. You could do it right off of TradingView. There's zero reason why developing an edge in the markets to be putting any capital at risk. It's not like you're going to get lucky and make money. You might make money for a short period of time, but you're probably going to lose more money over a longer period of time. So anyway, here we are, CTM. Everyone, that's great. I mean, this is so important for everyone to be reminded of that. Everyone, myself included. The DXY, I wanted to take a quick look over at what was going on in that major trend reversal. And we have it in two different ways, right? So we had a major trend reversal up here. This was dollar milkshake theory in full effect. This was like a shortage of dollars in the financial system. And you saw the dollar respond in kind, and then you saw the central bank respond. Central bank opening up direct swamp lines to almost all central banks across the world. Almost all central banks across the world, making sure they had access to dollars. And then you saw a major expansion of the balance sheet and continued quantitative easing and purchase of securities. And up until this point, if you remember, this is all live on the live streams on the public channel. Even during this volatility over here, and that was massive, we maintained and held our strong dollar view, and rightfully so, right? Dollar over here was strong. This was massive volatility, and we held the line until here, and then this happened. We had a major new piece of information added to the equation. What we just talked about with the central bank's intervention through swamp lines, balance sheet expansion, and then over here, this line over here on that technical breakdown, we flipped from dollar bulls to dollar bears. Now, those that espouse things like the milkshake theory, they did not. They did not say, you know what, a major new event has happened. There's every reason in the foreseeable future that we should be looking at the dollar weakening. That's a hard one to sit with, right? And instead, for 2.5 years, you just held on to dollar milkshake theory, dollar milkshake. Oh, look, things are in bad shape again. And look, I was right. Nah, I mean, for some, maybe that's not how we do it. We're trying to stay on the right side of the market. Now, something else developed over here. This was CTM Hive Mind. It was Will pointing out at this particular moment right over here when we had this major trend line break. It was notable. It was notable. At this particular time, most of our bias was for further downside. You can't see it here. I don't want to confuse you too much, but this line that's happening right over here, as an arrow is, that you could see on the far left in August, that test of support, that line goes back all the way to 2008. And then you could see again in November into January, another test, and then where it broke down, and then it's being tested here as resistance. So this over here, that looks like you are seeing a breakdown, a retest, and then going in for the resumption. It was very close to resuming down, right? It was very, very close, which means at that point, your expectations should be for further potential weakness in the dollar. You have to be prepared for it. A lot of people like to point to this period over here and they say, well, everyone was talking about a much lower dollar. Rightfully so. You should have been talking about a much lower dollar, because if you were very close to a resumption down, or if a breakdown, retest, resumption down, and the original position happened way up here. However, once you had the break out of this trend line, things changed a little bit. Something's not right, right? And Will also pointed out Same exact setup. This was this was a year earlier in June of 2020. It was the commodity breakout. It was a massive I want to say decade. I don't know if it was more than a decade or how long it was, but a massive bearish descending channel breakout that occurred. From what I see out there, a lot of people, a lot of podcasts over the last few months are talking about, oh, over the next decade, you want to be positioned into commodities. The signal came 2.5 years ago, right? Anyway, so here we are, and you have a major potential event. Will called it out. And then over here, Raoul Pal called out this inverse head and shoulders that was taking place. And you could see this is the left shoulder, this is the head, and this is the right shoulder. And Benny, I mean, was this over here the breakout? By the way, since we're here and we're spending time together, right? If you have, I don't even know how to line it up. I guess if we're doing it like this, right? And we're doing. Thanks for letting them fly, everyone. I appreciate the love. If you're here and you enjoy the time shared, if you enjoy the community, if you enjoy spending your mornings taking a look at the markets together, learning how to navigate them, please go ahead and take a moment. Even if you're on a mobile phone, I know it's a little bit harder, show the love and smash the like button. I really appreciate that very much. And then what you see over here, like, okay, this is CTM entry, stopped out over here. Okay, so when that happens, you're then moving it over to here. And then again, you have entry right over here, right? And then that's the bottom right there, right? And that took me what? One first attempt, stopped out. You don't want a high win ratio. When I say you don't want a high win ratio, if you have an overly obnoxious high win ratio, that means you're a failed trader. For real. There's no way. I mean, unless any of you are using some type of high frequency trading algorithm and have like inside data feeds to the exchanges, then I imagine it could be done. But honestly, if you have like a high or worse, that you feel the need to be right, therefore you're looking for a high win ratio, you got to rethink that. I could only lead you. It's up to you to do that. Thank you, John. I appreciate that love. That's really beautiful. So this was over here on the dollar, like one stop loss. And then this one over here, CTM 1.0 executes. There's a beautiful video put out during the summer of 2021, how to trade out of a bear market on the channel. If anyone is interested to see a little bit more about what I'm sharing with you here right now, and you can see that this is the low of the dollar and the turn. Now, Benny, it's not really confirmed at this point. It's not confirmed, and you have to have a strategy in place because so many things are happening all the time from so many different viewpoints and so many different time frames. And I just talked to you about what it was like for the bearish case at the time and how you had the breakdown, the retest, and then almost the resumption down, right? So you had multiple things happening. I'm talking about one with you right now. So you could say that's the bottom. And then you have Will's more of a conservative line. That's actually what we call this over here, would be a conservative line of repair. And then Raoul Pal put out this inverse head and shoulders over here. And you could see that, well, that looks like a bottom developing. When Luke points out what's happening now on Bitcoin could resemble what's happening over here, you could see that the low was tested. Right over here, the low is being tested, or it could be over here, right? You could have the sharp move up, or not even that sharp on Bitcoin, but they move up, and then a test almost of the low. Could you imagine this happens on Bitcoin? Can you imagine Bitcoin goes to 30,000 and then comes all the way back down and tests 18,000 again? And then, I mean, there's nothing easy about it. Don't put into your mind some type of crazy idea that Bitcoin's going straight down to 10,000 or Bitcoin's going straight up to new all-time highs. You know, don't even have any type of those ideas unless you have a crystal ball. I would really love one on my desk That's not what I'm going for on my desk. I'm going for, by the way, the Bull and the Bear trophy. I'll tell you more about that in 2022. Over here, you had a breakout of that inverse head and shoulders. And then you had what? Breakout. You came in for the retest. That was a failed retest. You see, I'm on the daily, but we'll stay on the daily to make it easier. And it's a failed retest. Not only that, you came in for that failed retest and then you resumed off. So here's where mental fortitude and discipline really matter to stay with the trade and stop being so black and white and understand that it's nuance. Look, a little help. I could say that, well, there's my support, right? If you want to have it tight, you could have it tight. I don't believe in having it tight personally. There it is right there. And then breakout, retest, resumption down. All right, but then what happens over here? Well, we have another breakout, a second attempt. Breakout from the inverse head and shoulders. Look at this beautiful retest that occurs. And then the resumption off. Boom. Look, here's the resistance. There's the resumption. Extend it out. It's retested over there. It comes in a little bit lower right over there. It's still a successful retest. And that over there was the breakout of the inner head, versus and shoulders. And, you know, Benny, it's complicated because there's no exactly one moment to know when that trend reversal happened, right? You could say, well, the first attempt was over here and that got stopped out. The second attempt was over here and that one worked out really well. And then we had over here this affirmation. This one didn't work. So it's very complicated. Benny, this is some CTM style stuff, but you could just view it here when we're viewing it together as helping you define where is an uptrend, where is a downtrend. And it's not that easy as well. Benny, what do I mean by that? I could say that here together live on Twitter. We talked about this sell impulse beginning off of that double black diamond break. You could see here's the first red candle, here's the second red candle, right? But, and again, same time, you want to go ahead and you want to use the trend line on the breakout and the upside. Well, that's a trend line break plus moving green back towards the trend and a good time to get in. Benny, that's not a system or a strategy in itself. That is an aid, though. Well, that's not true. It could be used as one, and probably one that would be for a lot of people, whether it's just Bitcoin or Ethereum alone, significantly more profitable. But anyway, Rob, I know that you were amped up for this session today. I like that message on Twitter. It got me going this morning, and it got me fired up to get here with you all this morning. So I appreciate that. It's like butterfly wings. They have such a big impact, and you never know how you're affecting someone's life. That's just a reminder when you're out there on Twitter, make sure that you interact with others in a constructive, fruitful way. Be looking to, whether you agree with someone's thought or not, engage with them in a way that is conducive to you learning and as well as them learning. It'll make your experience and everyone else's experience much, much better. That's where we are. That's a good, strong session today. If there's any questions or something that we wanted to talk about in relation, yeah, Silver Johnson, 100%. Employment is a lagging indicator, and we don't even know that. We are seeing, true to form. Like, could you trust the data? I don't think I could trust the data. And by the way, those employment numbers are also factoring in those that are actively seeking employment. There are people out there who just like, come on, they're tired, they're exhausted, they can't even like make ends meet, and they're not going to apply for X amount of jobs a week, and because no one's, I don't know, Jordan, that's a tough one. I don't buy that. I would buy it if you said people don't want to really work for $15 an hour when the cost of eggs is $8 for a dozen. Jordan, what kind of eggs are you buying? All right, so 18 eggs for $11. We got health issues. You have to buy the pasteurized, blah, 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 blah. I'm getting chickens. But, whether or not the data that we're looking at and how massaged and manipulated it is, I don't really truly trust it. But at the same time, I believe that it's our job to be able to maneuver and navigate these markets, regardless of the manipulation that's taking place. That includes all markets, right? And then we have the gold market, we know is the most heavily manipulated market there is out there. Okay, it's manipulated. You still have to play the game as best as you can. Yes, employment is lagging. I really expect layoffs to pick up as the economy slows. When we talk about the economy slowing, when the Fed is tightening and they're trying to put the brakes on the economy, most people expected like they expect like variable outcome. Fed tightens, things break. People literally expected April, May. Go watch some podcasts. You know, people expected things to break and were surprised by June when things had not broken already, right? But that's not how it works. The layoffs are just beginning. Wait until things get bad. It's a lagging indicator. Wait into 2023, and likely you will see layoffs really picking up and us moving towards what could potentially be, this is my bias, right? I think where everyone gets the most, like you have people right now who genuinely believe that markets are going to fall off a cliff and it could be a year or two before they recover. Then you have a whole nother people who believe markets are going to new all-time highs and then are going to like burn and crash spectacularly. Like both of those things could happen, but like either one who gets it right, I think you got lucky. And then also the worst thing that could happen, where the least people are prepared for, is that actually markets wind up slowly drifting up over the next year and then continue doing so. Because no one's prepared for that outcome. No one's talking about that one because no one sees it, no one believes it. I get it. But if you remember when things broke last time QT was running, from when the rate hike stopped in December 2018, and then until things broke, when the market broke and they started balance sheet expansion, risk didn't come off. Let me show you on the Nasdaq we'll look at. And I'm going to come back to 2000 and September 2019. September 2019. This is when the repo market broke and then the Fed began balance sheet expansion. What does that mean? What the are we talking about over here? All right. Let me just zoom in over here. So this is QT running. QT's running. The balance sheet, it is not expanding. It is contracting. What does risk do? And look to the top. Oh, risk is making new all-time highs. Oh, this is more complicated than people make it out to be then, huh? Yeah, I think so. I don't claim to have the truth or know what's going on. Risk is still at new all-time highs again, and balance sheet runoff continues. And then, wait a second, Jordan, this is the balance sheet beginning to expand. Yeah, the market broke here. People talk about the Fed will tighten to things break. This is what it looked like the last time things broke. It's right here. The repo market broke. The overnight rate skyrocketed, spiked, and the Fed said, whoa, the system just broke. It's right here. Risk is trading at an all-time high. Right off an all-time high. Oh, and then balance sheet expansion starts. Wait, Jordan, the way that everyone makes it seem to be and what I'm expecting is that what we're looking at is the market's going to break 2020. You remember, Jordan? This is the market breaking and everything's just going to fall. And then the Fed's going to come in and it's going to go straight up. And it's going to be so easy because I'll be sitting in cash. And then when things break, I'll just jump in. And then, yeah, this investing stuff's kind of easy. And I don't need to really think about it or work about it. And that's what everyone would love to happen. A lot of people, we didn't miss this. We did not miss this. It's on the public side of YouTube. We absolutely crushed it on the way down and then on the way out and held it on the way out while you were being told we were getting ready for another insolvency event. Now, I don't know that happens again. I don't know whether or not like we just got lucky or if we were here every morning putting the work in or not or how it happened. But I think that the markets are extraordinarily difficult. And I don't think it's as simple as, well, the Fed's going to tighten till things break. Well, you remember the last time the Fed tightened to things broke, right? And that's not really what you expected, is it? No. So anyway, that's how we're going to end today's session. You know, thanks for being here and for being a part of it. Absolutely, Aldo. I mean, look, my only goal here is to create a positive and supportive environment. The only thing I'm asking here is that if you enjoy the session and you enjoy being here, that you go ahead and hit the like button to show you support the content and or share it with a friend. That's all. Yeah. Steve, the energy crisis is no joke. We are in unprecedented times. I don't know what happens next. That's the truth of the truth. We are in unprecedented times, and I don't know what happens next. But I do know, if you were to describe to me what is happening right now, whew, how far off is the S&P off this year? All right, we'll just pick the top over here then. That's a nice trend line, Jordan, but that's not going to tell you how far we're off. 17%. How far did it come off? 24%. I don't know. I mean, it looks bleak out there. And not only does it look bleak, it seems that we are in for a lot of future pain. And not only that, it seems that any type of resolution to any of these multiple crises that are taking place, they don't seem to be any quick fixes. They seem to be, let's call it 5 to 10 years realistically. So I think that the world we live in, forget by January 2023, I think the world 5 to 10 years from now is going to look drastically different. And I have no idea what the world is going to look like just by, midwinter here. I don't. So many different things could happen. And because these times are so unprecedented, I think that the worst thing that we could do is try to believe we know what's going to happen and really just try to take it as it comes and be true students of the market and make sure that we try our best to follow price. And there's nothing easy about it. So at the same time, we become aware of what biases we have to try to keep them in check, right? Because, that's what's going to serve us best. And it's hard. It's difficult. It's not as easy as the Fed is tightening till something breaks. Yeah, most likely the Fed is going to tighten until something breaks. But what does something break look like? Do you think that or do you think it's going to be how it happened last time? I think this time is going to be totally unique and different. And there's no one out there that's prepared for it. And then we have some other really, something that's been brought to my attention through CTM ever since the beginning of the summer back in June was, the de-globalization that's taking place, right? And what the world might look like moving forward from here. I think just last week, finally, that was picked up. The Preston Fish had a conversation about it, and it's starting to enter the greater consciousness or let's say focus of us all, and that's good. So we continue to have these conversations and continue to try to figure it out together. That's our greatest asset, is the immense resources we all have in each other. Chickens is like not only chickens, Craig. I gotta set up some type of indoor hydroponic garden to grow leafy greens, spinaches and lettuces and all of that and the chickens. We got to make sure that we are able to survive whatever happens. Ooh, and then the dream, Steve. The dream is cattle. The dream is cattle. Yeah, I want a couple of hogs around. No question about that. Benny, we'll take a quick look at oil. I mean, the work we put in on oil was over here. Get in the sell impulse. This is when everyone came into the oil trade and were indignant when we talked about a sell impulse occurring. Game of Trades, Peter, very much on top of this at this particular time as well. Big shout out. Lots of love. And then we did an amazing job over here Again, this is when people went like, long oil, when retest resumption, retest failure, and then that break of that trend line, Benny. That's similar to what we just talked about on what did we just talk? Something earlier in the session, a similar situation developing, and then you had the resumption down. That was the breakdown, and then resumption from that overall trend. So yeah, it looks right now, it looks pretty bearish. Are we looking for any type of trend reversal to take place? Where would that look like? Benny, you want to keep it safe, keep it simple. I don't know that this is right because I don't see it, but if you want to give it room, that would be safer. At the same time, I need to clean up this chart. This is assuming that you've been following me all along and know what each and every line was added at the right time. What about some type of aggressive? That looks good, right? But I don't see the need. I think I don't know what it would be. You hear my voice? Do you hear that like uncertainty, that lack of clarity? I do. I pick up on it right away. That means I don't know. I don't need to know. I did a good job at the right times, being on the right signs and let this thing go a little bit. We'll pick up back up on it tomorrow. With fresh eyes and a fresh attitude, we'll pick up on it. Boom. So dollar sign, I mean, it's okay. I mean, it's just great that we're here together now. That's what I look at it. Figuring it out together. And that's what it takes for sure. That's awesome, Benny. I'm glad that. So you've been tracking. So what's happening now? I mean, Benny, if you're in there from then, or you've been following it then, look, this is resistance over here. Let me just draw this line in, right? Resistance, support, which is now resistance. So when I'm saying it's resistance, I'm just thinking ahead, right? So that should be an area of resistance, but you see it spiked back above. Maybe, Benny, that's a little bit better, right? Did you see what I just did? I don't know if you could see what I'm doing as I'm doing it. The first thing I'm looking at is this line over here, is this line and this line. I'm calling it resistance because it's now resistance, but at the time it's support. It's support, and it's that support there, when it's broken, becomes resistance. So this is what I first focus in on. And then the next thing I'm doing is I'm looking over here. What is the market paying attention to? The market didn't really respect that so much. Price came back above it. All right, let me just follow that out and play it out. Does it lead to anything? Right? And then I could say, well, that was an area of also support, right? So that broken support is now holding a little bit more resistance. That gives you a little bit more room, Benny. As long as we're below there, might want to give this time a little bit time to push, or you might want to be a little bit more aggressive and put it off of this one, right? And just assume that if you break back above, that likely that one's going, but it's not black and white, and it's that whole area above us is, I'm trying to get that off, that whole area above us is resistance. So from there to there, you have a pocket there of this is resistance, but so is this. Above this, that might be where we are confirming a different trend trader. All right, everyone. God bless you all. Thank you for this strong session each and every day. Thank you for sharing the love, hitting the like button. Tomorrow is Friday. I'll see you all then. I think on Saturday, for Saturday, I don't know how early in the morning or whatever, but I'll upload the awesome conversation with TXMC Trades. Beautiful, incredible macro discussion. You're really going to value it. I just want to make sure that I get that tidied up, and then out to you on Saturday. So everyone, have a beautiful day. I'll talk to you all later.